insurance specifically designed for cash value. The word guaranteed is all over the papers. In fact, I actually did this with somebody recently. We pulled up their document, their policy that they bought. It's a 24-page document, their policy, and we you know how you can do the find and replace, Control F, like find. We search for guaranteed. Guaranteed was listed 90 times in 24 pages. 90 times.
90 times.
And I think that is amazing, but I also think the average person out there does not know. They just don't know that you can get guaranteed income from something as simple as whole life insurance sitting in front of you. And so that's my favorite. That is absolutely my favorite by far. That's the one I love the most. But there's other guaranteed income assets, things like annuities. I did not realize this until I started helping people with whole life insurance designed for cash value. But I was at a conference or something, and somebody stood up and they said, you know, there's only 5 ways in the world.
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success.
Got all sorts of insurances, right? But hear me out, Scott. They only pay out if the bad thing happens. Does that make sense? Mm-hmm. If you crash the car, then you'll get a check. If you do not crash, you don't get one. If you're hurt at work, that's workers' comp, right? If the plane loses your luggage, if you need to go to the eye doctor. But whole life insurance is not an if. It's the only insurance plan that's not an if. It's a when. Everybody passes away. So if you're holding this thing, this insurance product, there is a check. Because there is a check coming, whole life insurance actually just works way more like real estate than it does anything else. And I'll explain it like that since you brought it up. You've dabbled in real estate before, starting a fund. I love that. But when you purchase a house, right, don't you normally put a little bit down, but they give you access to the whole house? Very similar to insurance here. I pay a little bit, but I've got access to the whole value, right? And then every time you make your mortgage payment, more of the whole value of the house becomes equity. It's paid for. It's already paid off. It's bought. It's the same thing in whole life. Every time you make your payment, more of the big number at the end is paid off. It's equity. It's paid for. It's bought. It's yours. And the difference between home equity, where you've got to go into a finance institution and turn in every piece of paper you've ever seen and bend over and cough, right? It's ridiculous. Is that with the insurance company, you just have to ask them for it and they'll send it to you. No paperwork required, really. You can do it off your phone, do it wherever you want. As long as it's equity, you can have it. And so because cash value is what they call the money inside a whole life, is just equity of the death benefit, your cash value has to rise each and every year to eventually equal the death benefit. So you guys understand how this works. You buy a big policy, $1 million or $2 million and $3 million. If you've set it up appropriately, which is what we can help you do, you've effectively bought $1 million, $2 million, $3 million of cash. Now you'll get it over your lifetime, right? But you've bought it. You've bought it. If you pass away early, I'm so sorry, your family gets it. And if you live, you get it, right? And so, therefore, that makes whole life insurance a guaranteed income asset. I bought it. We structured it appropriately, like I just told you how we structured it. And every single year, every time I pay that premium, I have more money available to me that I can go and use and do whatever I want. It's liquid. It is private. It is unstructured. It is mine. And so what makes it really cool, of course, is I pay this much, right? But the death benefit is this much. So after about the second year, third year, when you pay that premium, you're getting more cash value, equity use than even your premium cost, because it's growing into the big number. It makes it really, really cool. And so what was eye-opening to me, I'll kind of go back to my story. When I was working for a W-2 employee, right, employer-employee position, I opted into the 401k, I opted into the Roth IRA, I opted into the other plans, and I started to realize that that word guaranteed just didn't exist on these other plans and programs, nowhere in the paperwork. And like I said, I'm a nerd. I read the paperwork. Just isn't one there. And then when I went over to learn about, started to hear about, had a friend who was doing whole life insurance specifically designed for cash value, the word guaranteed is all over the papers. In fact, I actually did this with somebody recently. We pulled up their document, their policy that they bought. It's a 24-page document, their policy, and we you know how you can do the find and replace, Control F, like find. We search for guaranteed. Guaranteed was listed 90 times in 24 pages. 90 times.
90 times.
And I think that is amazing, but I also think the average person out there does not know. They just don't know that you can get guaranteed income from something as simple as whole life insurance sitting in front of you. And so that's my favorite. That is absolutely my favorite by far. That's the one I love the most. But there's other guaranteed income assets, things like annuities. I did not realize this until I started helping people with whole life insurance designed for cash value. But I was at a conference or something, and somebody stood up and they said, you know, there's only 5 ways in the world, in the entire world, to guarantee, that's my favorite word, so I perked up, guarantee lifetime income. And I was like, lifetime income. Okay, a little different than what we're doing with whole life, because you can use all the money, right? You could take it all out and blow it if you wanted. So it's not really lifetime, right? That sort of thing. Get 5 different ways, only 5 in the whole world to guarantee lifetime income. And he said, and they're all annuities, every single one. And I went, hold on a second. Now I got to look into annuities because is this true? Right? Guarantee said my favorite word, right? And so that's another guaranteed income asset that goes a long way. A lot of people really like annuities. You know what's funny, Scott? I recently did like a little history lesson because, again, I read. And I realized that everyone's favorite Roth IRA, I mean, that thing is blowing up. There's a significant amount, trillions of dollars in those plans right now. The Roth IRA, the first dollar that kind of went into that was 1997. I was like, hold on a second, I'm older than a Roth IRA. Okay, that's interesting because it seems like, you know, it's like been around forever the way people talk about this, right? And so I looked up the 401k and it said the first 401k use was 1978. And I went, hold on a second. So, I mean, my grandparents had no 401k, you know? So let me call. How were people before 1978 retiring without a Roth IRA or 401k? Pensions. Pensions are a product of insurance companies. Annuities are a product of insurance companies. Whole life insurance is a product of insurance companies, right? And I started to realize, like, hold on, insurance actually has way more depth than just hoping you pay this much in your bill and hoping you don't crash, right? And and that really what sparked it for me to start looking into how are the ways I can use insurance? What are the other things insurance can do? You know, that sort of thing in that process.
Well, that's definitely a unique concept. Well, it's not really that unique because more and more I'm hearing a lot more people using it, and you know, there's a lot more applications to it than I previously knew until, you know, probably recently in the last 5-10 years or so, just because, you know, we're not exposed to it, and you know, you don't know what you don't know. There's you know, like you said, you know, the IRAs, I don't think they came in until, you know, like you said, till the 90s, the Roth IRAs and stuff, and then before that was pensions, and then they moved to the 401k, so they wouldn't have to be so the companies wouldn't have to be responsible for the retirement of the people working there, which is
it used to all be. So I used the word a few times in this recording, Scott. I used the word typical. The typical plan, especially for like a retirement plan, right, is IRAs or 401ks, but those are not the traditional plan. That's not the traditional plan. Those things are new. The traditional plan is through insurance companies. That's how you do it. Back in the 1920s, 1930s, I think the statistics say that like 80% of Americans had whole life insurance because that's how you retire. And then they changed some rules. IRS came out. There's a big history lesson in there, but they changed some things. They had a little, you know, a bill, tax bill. Wasn't a big, beautiful bill back then, but they had a tax bill. They offered corporations tax breaks to offer their new plans. So corporations started to offer them, and then all of a sudden we forgot. And now it's 401ks and IRAs only. If you're not doing that, right, if you get on Instagram, they're telling you if you're not doing that, you don't know what you're doing. And I'm going, they just made that up. That's 1997. You know, hold on a second. Why don't we go see what's tried and true that has worked over and over again. And that's, again, I'm beating a dead horse, but my favorite word is that word guaranteed. And that just helps me sleep good at night. So that's what I like.
It seems that all kind of came in alignment when you could start kind of slowly started trading on your own, and it kind of flooded more and more money into the stock market. So there was I don't want to say it was a hidden agenda because it was right in front of everyone. Nope. So that, and not speaking of any conspiracy theories or anything, but you saw how the stock market kind of just exploded with the trillions of amount of money that got poured in there through these 401ks and
that's right,
and everything else. So
I looked it up recently. The national debt, 36 trillion at the time of this podcast recording, but Americans in total have over $40 trillion in qualified retirement plans.
Really,
more than the national debt. So again, that's what the typical American's doing. That's what we're coached to do. That's where the money's going. But not my preferred place because like the golden rule states, right? He who has the gold makes the rules.
Yes.
And I'm not sure I trust them up there making the rules with my money.
Yeah. And, politics aside, I know, coming from Jamaica, my dad's Jamaican, my mom's American. I know they don't care about me, and the feeling's mutual. So we'll just all do the best that we can.
There you go.
and I don't have any. I'm good, bad, or indifferent to them because they're going to keep making the rules that are usually in their favor and not ours. So, and that is what it is. But it's great that you're expanding on your education platform and letting people know that these options are available. What are some of your other, you mentioned mobile home parks and stuff like that. What are some of your other things that you like aside from the insurance products and the annuities?
Yeah, so we dabble in a lot of things over here. The important piece for us is where the money comes from. You probably understand that by now. We use the cash value out of the insurance policies to then do our investments, right? And because we like guarantees so much, I'm pretty risk adverse when it comes to the investments. I don't really like to lose money. So we, for the most part, do a significant amount of actually peer-to-peer lending. Significant amount of, so we've done it individually, literally peer-to-peer. I've recently opted into some platforms that do peer-to-peer lending on like a micro loan level. But I've really had a lot of success in peer-to-peer lending. We've been able to finance a lot of cool things even around our town, which kind of makes it cool because that means you can walk by and take a video and, send it to the next guy who's asking and say, no, they're building it. I'm looking at it, that sort of thing, which makes it really fun. We've also, for a little bit of time, partnered with someone in our industry as well that started a platform, actually a peer-to-peer lending platform, which is pretty fun. So we were involved in that. We do have a long-term rental. We kind of, I guess, actually going back, we did the long-term rental purchase at the same time as our very first peer-to-peer lending deal. And fast forward, it's been 5 or 6 years now. Fast forward, I think we've all, kind of me and my brother, have opted into, we like the peer-to-peer lending. The long-term rental, I painted a closet at one point, right? And I just... I like work. I can work, no problem. I can be a hard worker, but I'm like, I was trying to help people with finance, not paint a closet, And so we just tend to like the peer-to-peer stuff better, but we have done long-term rentals. We're actually looking in currently to commercial real estate. For us, the reason that we want to do a commercial real estate is actually just before the tax benefits. We're looking for some more depreciable assets, if I said it right.
Yeah, depreciable, yes.
Yeah. And so we're going to look into some things like that. We haven't really started down that path yet, but that's coming right down the line. I'll think of some more as I keep going. It's been about a decade for us helping people with finance, which means we've been introduced to a lot and we've been able to do a lot. So I'll think of some more as we go, but we like to keep it simple because some of the typical investments, you're not in control. You can easily lose. There's a lot of risk. And so we just avoid them. And for us, it's been working out just fine.
Well, that, especially if you're on the debt side and doing private lending, peer-to-peer lending, you are in control because you're loaning debt based on the asset that they're providing as collateral. So you might be loaning on a business which has to produce a certain amount, and they might need some receivable loans or something like that to cash flow the business. And that's really great, especially in the community. If someone wants to open a business or something like that, because in a lot of poorer communities and minority communities in the past, a lot of banking options were not available, and if they were available, they were at very high rates.
Yep.
So you can dictate the terms, and you can walk by and say, "Hey, I helped Joe over there start his coffee shop," and
Yep.
and we're partners there, and we're constantly doing that. And I really like that you said commercial real estate, because that's what our fund will be. It's all development stuff like that, and that's we're really bullish on that, because there's a shortfall of housing and just building in general, just because of the rates and everything. And what are the things that you like about commercial real estate? There's one, the tax advantages, but everybody needs to have a business, so naturally you could buy the building, and ownership of the building is a great thing too.
Yeah. So again, we are looking into commercial real estate specifically for the tax advantages. When you're in business, you're going to know this, Scott, right? But when you're in business, we've got lots of contractors that work with us, lots of equipment, and right, we're shooting if you're watching the podcast on YouTube or something like that, right? I'm in a studio, someone had to pay for stuff in here,
Yeah.
And so what ends up happening is, after you've outfitted a lot of what you've got income, and boy, is Uncle Sam coming for income, right? And so it becomes a little bit of a game of, what do I qualify for? What has Congress incentivized us to do in order to earn the tax breaks? And so that's one of the reasons we're looking into commercial real estate. We really want the depreciable asset, but of course, a lot of what we are going to look into is going to produce income, right? And it's going to produce passive cash flow, which is back to the beginning of the episode, right? Passive cash flow. So we can do two things with one stone. So again, we're just starting to look into it. That is our next venture. If we were recording this podcast 1 year from now, at the end of 2026, I'd have lots of details about what we did and why we did it and that sort of thing. But right now, we're just getting started. So it'll be on our journey. If you're tuning in, or decide, you guys, whoever's listening wants to follow us, you can follow along. I'll be sharing as we go. But right now, those are the two reasons. We want passive cash flow. Commercial real estate can do that. We want the asset, so we can accomplish a little bit of a tax break.
Well, that's great. I get excited about commercial real estate. So if you need any help with any of it, I'll be glad to help you find who you need to find. Because together, one saying that I heard a long time ago, I don't know who said it, but together we can do more. So I like it, because I like what you're doing, and it's just going to be able to help a lot more people. The more, plus they see you doing it. Oh, he just bought the building over there. Okay, well, he can do it. I can do it, because I didn't know some time ago, even though the first captain's job I got was a gentleman. He was a real estate developer, and I didn't know that a lot of the things that he was doing I could do, because a lot of them that he was doing, I'm doing now. I mean, on a smaller scale. He was a billionaire family or whatever, but he started by building his first house in the 50s. So
there you go. A lot of that stuff, when you see someone else doing it, sometimes it feels so not attainable and out of reach, just because they're doing it with a little bit of a bigger number than you've got access to. But you can still do it. You just do it to scale. You do it on your scale. And I think a lot of people miss that. They go, oh, I would never be able to. It doesn't matter what it is, right? It could be a YouTube channel. I could never be able to get 1 million views on my YouTube channel. And it's like, well, hold on a second. That guy posts every day. That's what he does. And that's how he got the 1 million views.
And he's been doing it for several years.
There you go.
Right? He put in the work. And if you tell yourself you can't, you definitely won't.
Exactly.
So whether you say you can or you can't, you're right both ways you look at it. And it's one of the things I say to myself that people always ask me that what would you say to your younger self? I always say, hey, fail faster, think bigger, and go bigger, because. I had Dr. Benjamin Hardy on my podcast, and he said something that resonates with me, and I say it all the time, is don't think too small because you just might make it.
Yeah, man, that's a good one.
Yeah, that's a great one, and please share that with everyone because I think, a lot of times we're the ones, well, all the time we're the ones holding ourselves back. We're the bottleneck. And, if we tell ourselves that, oh, I could never do that, then, maybe you need to just reassess and
Yep.
take a hard look. Cause I remember going to one of the first meetups I went to that I really liked. And a lady that's a partner now, she said, well, if they can do it, I can do it. I was driving home and I was like, that's right. And it was what to me would be seems like as a small thing now was like a 12-unit apartment building. And she said it seemed colossal to me at the moment. And when she said that, I was like, that's absolutely right. What were some of the aha moments that you had other than the word guarantee? And then I'm going to share that with a lot of people because I think that'll definitely resonate. You didn't find that, you had to keep searching.
Yeah, man, I'll share some of the aha moments I had kind of getting started in business for sure. But I even recently had an aha moment, even in this last week. So I'll kind of share a little bit, get a little open here for everyone who's paying attention, who's listening. But we've kind of in the tax environment. Okay, so in the
Mm-hmm.
tax environment, I've always felt like I just don't know. The
Mm-hmm.
IRS changes the rules.
Oh,
The tax
yeah.
code is really confusing. Every time I look at the paperwork, W-2s, W-4s, I-9s, 1040s, 1120s, they got numbers behind them,
Yeah.
letters behind them. I'm
Letters.
like, I don't know. I don't know.
Right.
And so as a business owner, you end up paying a lot of money actually to accountants and bookkeepers and strategists, right? And it's like, I don't know. I don't know what I'm doing. And so recently I just, I had this aha moment where it was like, you know what? I can know. I need to stop telling myself that I don't know, similar to
Mm-hmm.
what you said, and I need to take action. And
Mm-hmm.
so, with the help of AI and some other services I had, right, I just started uploading all the documents. Tell me about this one and why I have it. Tell me about
Mm-hmm.
this one and why I use it. Tell me about this one and why
Nice.
they filed it. Right? Upload and upload and upload and talk to me about it. Okay, I'm looking, the income says it's this number, but at the bottom of the paper it says it's this number. There's lots of lines in the middle. Talk to me about them. Well, what's this line?
Mm-hmm.
This line doesn't have anything. Tell me what it is. And this has actually happened very, very recently, but it was a really aha moment for me because as I went through it at my own pace, talking to the computer, basically, right? AI,
Mm-hmm.
I started to get a way better understanding of what was going on. And once you have a
Mm-hmm.
better understanding of what was going on, right? There's a very famous quote out there. I'm not exactly sure who said it, but it says, um, if you understand the problem, you'll understand what to do
Mm-hmm.
every time. And I felt that when I was kind of going through this even recently. Soon as I understood the problem, self-employment tax is really high.
Yeah.
That's what it is, not my federal or my state.
Yeah. Yeah.
Oh, got it. Okay, once I understood the problem, I understood what to do. Immediately. Oh, and then this whole time I thought I couldn't, and it's too hard and it's
Yeah.
complicated, right? So that was
Yeah.
like a personal one very recently. But if I go back about a decade, starting business, one of the biggest eye-opening moments was somebody, I was sitting in a conference or something, watching an event online. I don't remember, but somebody said one of the biggest secrets they had in business that someone told them. So now this is like, it's like the telephone game with the cups or something, but I'm getting it,
Yeah.
3 or 4 people later, was give your best stuff away for free. Give your
Mm-hmm.
best stuff away for free. And that was eye opening for me. And so for a decade later, I basically, $5 or $10 for some pertinent stuff, but I
Mm-hmm.
basically never charged anyone to help them.
Mm-hmm.
And that has gone a long way. One, it builds trust with people, right? You're not going to get online and find a bunch of negative reviews about my
Mm-hmm.
business. They're just not there, right? It builds trust. It builds referrals. I mean, most of our business these days is from referrals, people that we've helped,
Mm-hmm.
and then they go, now help my mom, now help my brother, now help my best
Yeah.
friend. And that's the best business. It's so easy, actually. You're getting on the phone with somebody who knows you already, who trusts you. We like to make a lot of content on YouTube and some other things. So I've gotten on the phone with people before and they go, I know exactly who you are, what you're up to. I've watched every single one of your videos. They're like telling
Wow.
me stuff about me that I forgot, you know? I'm like, oh, I did do that, you know? Oh,
Yeah.
I remember, you know? And it's fun because it
Yeah.
makes it easy. Because it's like,
Hmm.
oh, well, hold on. I need to tell you this. This is really important. They're like, no, I know that.
Yeah.
No, I know that. Oh, oh, okay. Well, then, do you need, what do you, yeah, I just wanted to work with you. Oh,
Yeah. Yeah.
perfect. Then let's do it, you know, that sort of thing. And that's been really fun. So, and that stays true to this day. I just don't charge. And that was some big advice that I got. Really an aha moment. It took a long time for me to figure that out, kind of put my head around it. Really just because, you know, in business, you can be hard headed when you're in charge,
Yeah.
right? Like I just want to do it my way, you know,
Yeah.
and that's been helpful. I had another buddy, just this is a real quick one, 10 seconds. I had another buddy tell me, if you're using a business coach, just do what they say.
Yeah.
And that stuck with me because I do have a
Yeah.
business coach. And for a while I was kind of butting heads, but that stuck
Yeah.
with me. He said, if you've got a business coach and you're paying them and they're good and they know your business, just do what they say.
Yeah.
And that
It's
was a
it's
big time.
it's that simple because you're hiring them to do that, and
Yep.
and if generally when we do what the coach tells us to do, it works out great and
Yep.
probably a lot better than we anticipated. I think what getting back to what you were saying about your tax strategy and stuff. I think I'm going to do that with
Yeah,
my
you should.
recent taxes and just kind of go through it because I've learned over the years, just because I've been self-employed for over 20 years now, just on the yachts and stuff. And I consider myself, I know quite a bit about certain businesses, but I don't, according to the IRS, the never ending partner that gives us guidance on what we can and cannot do.
Yep.
And I call it guidance, but,
Yep.
but those are some pretty hard, fast rules sometimes, that I will definitely be doing that, and probably do my return
You
here
should.
recently, because I think it will be really helpful. And then I'll probably just go through it and probably show it to a few people that just, they were asking me about how, especially with the real estate stuff. And I do the same thing. I give away a lot of things for free, and a lot of people have said to me, like, why did you help that? You should charge for that. Nah, the way I look at it, I wasn't raised that way, and I
Yep.
just, everybody needs help sometime. We all do, and I know that there's been times in my life where I didn't know I was struggling that bad, but people have come in and said, hey, why don't you just try this, without even me really asking. And that, what goes around comes around, and it, you get in just a roundabout way. And I'm not giving just to get it all back 10x or whatever, but you feel you live much more of a more
Fulfilled.
fulfilled life when
Yep.
you give. There's that book that I read, the Go Giver. There's a
Yeah.
whole series of them, and they're really great. And I was like, I can see why, a lot of things have just kind of fallen into place for me, just because of just being that certain person. And people say, well, this person is taking advantage of you, you know, uh, they're being, because you're being too nice or whatever. I said, well, if that's what you call it to you or whatever, if they are taking advantage of me, they'll probably go away. They
Right.
they usually do, because they will definitely start to feel bad because they feel like they've taken too much from you or whatever. But so be it. And like my dad always told me, he said, look, if you really want somebody to go away, just loan them some money.
Mhm. Sure. I've had one or two of those in my day, right? As soon
Yeah,
as you give it to them, don't hear from
yeah,
them again.
yeah. And
Going
I
silent.
yeah, I've known that, and I've always said this: if I have it, I just give it. And if I'm not going to loan it unless I'm doing a business like you are, where you have a contract there where there's expectations on both ends. But
Yep.
I think that's a great thing for people, just to see that there's so many ways to do it in business and in real estate. You can do private lending. You don't have to necessarily go and buy the rental property where you are painting the closet. And I hear from people, like, they tell me, I want to get into real estate because of passive income. I said, well, a lot of times it's not passive.
Yeah, it's pretty active. Yeah, I agree with that. We discovered that pretty quickly on that
Yeah,
first long
it,
term. It's
it
active.
can be, unless you're getting into a fund or
Yep.
you're doing into a limited partner in syndication or something like that. But this has been really great, and I really think that we should definitely be doing this again at some point, just to follow up with you on how it's gone on your commercial real estate
Yeah, we should.
adventure.
We
So,
should.
where can people find you if they want to look for you? I know the Banking Bros and social
Absolutely.
media.
That's it. You're looking for thebankingbros.com. If you want to go to our website, there's, of course, full length explanations, videos, blog posts, client testimonies there if you need to learn more about guaranteed income assets and which one might fit the best for you. Anything that you're going to find on the website or social media, if you click the consultation call link, it's going to be a free call and you will possibly get me. It's either going to be me or my brother. That's how we do our business together. And we field those calls personally. We will walk you through the best thing that makes sense for you. So thebankingbros.com is our website. You can follow us on any social media platform, and that is also The Banking Bros. A lot of people like our YouTube channel. We put out at least 2 or 3 videos every single week on some sort of financial concept or something going on real time, right? And so if you follow us there, that'd be amazing. Leave us a comment, drop us a like, and I'll respond to those. Those are fun. And but yeah, that's how you can find us.
Well, thank you so much for taking the time to speak with us. And this has been very eye-opening in a lot of different ways, and we had some great conversations. Thank you so much. I'm Scott Kidd with the Yacht Captain Investor Podcast. Just as a reminder that the best investment you can make is the one you make in yourself. Thank you. See you guys next time.